Okay, so this week the market is telling two completely different stories. As the year wraps up, we're literally seeing two financial worlds on a collision course.
So on one side, you've got the traditional stock market, and it's basically going into hibernation mode. You know the drill. Corporate earnings are pretty much done, key economic data is old news, and with the holidays right here, things are settling into that classic sleepy end-of-year slowdown. But on the other side of the coin, well, there's this number. $23 billion. It's just a massive figure, looming over the market. And let me tell you, it has absolutely nothing to do with any holiday slowdown.
And that's exactly what it is. While Wall Street is taking a nap, the crypto market is gearing up for a totally record-breaking options expiration. So no, this isn't just another quiet holiday week, it's shaping up to be a multi-billion-dollar showdown.
So let's just quickly set the stage here and take a look at why the traditional financial world is basically hitting the snooze button.
I mean, think about it. The typical things that move markets, they're all on vacation. There are no fresh earnings reports. Holidays are in full swing, and any economic data we have is already out of date. So unless there's some major surprise, the path of least resistance for stocks is to just kinda coast to the finish line.
Okay, now for the main event, where all the real action is this week. Because over in the world of crypto, things are about to get very, very interesting.
Before we dive into the numbers, we really need to understand this key concept, max pain. It sounds dramatic, I know, but it's the price point where the most options contracts, the bets people have made, expire completely worthless. It's a fascinating theory, where an asset's price can literally get pulled towards this max pain level as expiration gets closer, causing, well, the most financial damage to the people who bought those options.
And the sheer scale here is just staggering. For Bitcoin, we're looking at a notional value. That's the total value of the underlying Bitcoin in all these contracts of $23 billion. And that max pain point, it's way up at $96,000. Now for Ethereum, the numbers are smaller but still really significant, with the max pain price much, much closer to where it's currently trading.
So, as you can imagine, these huge price levels set up a classic battle, the bulls versus the bears.
For Bitcoin, the bulls are aiming for the moon, with major bets on the price hitting 100 grand. Let's be honest, at this point, that would require a true Christmas miracle. The bears, on the other hand, are positioned much more pragmatically, down around 85,000. And with that max pain price sitting at 96,000, the bulls are definitely the ones feeling the most pressure right now.
By contrast, the situation for Ethereum is way less dramatic. The max pain price of $3,100 is very achievable. It's sitting right near where Ether is currently trading. The extreme bull case is $6,000, which seems, well, highly unlikely. But the core Battleground is much more grounded in reality.
So, okay, beyond the wild options market, where is the money actually flowing? Let's follow the capital and see what it tells us.
Well, if we look at the big institutional players on the Chicago Mercantile Exchange, the CME, we see a picture of calm. Open interest, which is just the total number of active contracts, is actually going down. This suggests traders are closing out their positions for the year, not gearing up for some big price swing. Volumes are normal. The big money seems to be winding down.
And hey, a quick side note for all you traders out there, keep an eye on the CME gap. That's the price difference between Friday's close and Monday's open on the futures market. Historically, the Bitcoin spot price tends to move back and fill this gap over 95% of the time, which makes it a really key level to watch.
Now, what about investment funds? Well, for Bitcoin, the story is just inconsistency. One week, money flows in, the next week it flows out. There's really no clear trend, which suggests that investors are pretty uncertain about the market's next move.
Ethereum's fund flows, though, they paint a much clearer and, honestly, a more bearish picture. We've seen 7 straight days of outflows. That means money has been consistently leaving Ethereum funds. This signals a much more persistent negative feeling from this group of investors.
So we have this volatile options market and these mixed-up fund flows. But what about the long-term players, the companies that are actually holding crypto on their balance sheets? What are they doing?
Well, corporate holders are playing a different game entirely. For Bitcoin, yeah, accumulation has slowed, but it hasn't stopped. In fact, 9 of the top 100 public companies holding Bitcoin actually added to their positions just last week. And for Ethereum, despite all those fund outflows, there is no sign of a mass corporate sell-off. These long-term holders are clearly not panicking.
Which, of course, brings us to the final, huge question.
we have this massive $23 billion options expiry, where these bullish dreams are colliding head-on with bearish reality. We have calm futures markets, but nervous fund flows. And through it all, you've got these long-term corporate holders just staying the course. So who blinks first in this high-stakes year-end standoff?
We are definitely going to be watching to see how this all resolves. If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.